Okay, good morning. Please type in the chat that my audio is working, that you can hear me, and I'll wait to see that. Make sure the audio is working before I move forward. Here's me. Good. Okay, thanks, guys. All right, so let's get started. First, post any questions that you might have now, because I don't want to get towards the end of the broadcast and then you're not able to ask those questions. So make sure you post those in the comment section right now. All right, let's get started. First, earnings edge. Let's talk about, so I'm going to go over the earnings edge, the Premier Level 5, and then, of course, the safe wheel. But I'll start with the earnings edge here. Now, what did I do last week? I traded AXP, and of course, I used all of the 8 filters, and that was a winning trade. Made around $300 before commissions. Of course, commissions are not in this number here. So now, let's see. My record is 16 wins, 5 losses, and 3 ties. But ever since I started using all 8 filters, it's only been a couple of weeks. I'm 2-0. So far, using all 8 filters is working well. And you can see the account is actually over the $5,000 mark. Started with $5,000, so I'm up around 3%. Not as well as I expected, but again, trading all of the 8 filters seems to be working as planned. And we'll see how this goes as time goes by. All right, let's talk about the Premier Level 5. And that is this account here. We started with $30,000. Now, what I like about this system is it's non-directional, which means I can react to the direction of the market. So the market goes up, I can react to that, or if it goes down, I can react to that, and that's okay, no big deal. I can be behind the market as far as direction and still make money. So there's a big advantage to that, not having to worry about picking a direction. It's a big advantage. And if you want to get that edge out of the out of options, which is selling options and getting the implied volatility, if you want to get that edge, you want to be able to be non-directional, because that edge has nothing to do with direction. So you want to take direction out of the equation. So, and I needed to do some updates on my stats. My stats were a little bit off, so I went in over the last few days and I went through every single trade. And with the Premier Level 5, I've done 9 trades, 4 wins, 0 losses, 2 ties, and 3 open trades. Currently 3 open trades. And the account, you can see here, is up close to 3%, not quite 3%, over a 3-month period, which is right on with the back tests of around 12% a year. But it's very nice because the drawdowns are extremely low. So that's another thing I really like about this system. This is the best system, I think, out there. Okay, so that's kind of the update on the Premier Level 5. Now, of course, let me go back. The Earnings Edge is available. I put a link in the description. And of course, I lowered the price on that recently. And then, of course, the Premier Level 5 is available. I put a link in the description for that. Now let's get into the safe wheel. We'll go into that account. Okay, so looking at the safe wheel, I've been trading BAC lately. And you can see that we probably collected about $60 in premium. And we're down about 140. So, we're down about 80 bucks since we've been trading BAC only. What happened last week? I sold a put and did not get assigned because BAC went higher. It looks like they reported earnings today. I wasn't aware of that. I don't pay attention to that. I don't need to with this system. But looking at it now we kind of look at it from Are we gonna start over? Are we gonna get a new put hedge? If we are gonna get a new put hedge, we could consider starting the whole thing over, a whole new cycle and a whole new underlying. And by the way, I do have all of these underlyings in here, thanks to all you guys giving me the options, giving me all these examples. So if you have an idea of an underlying that you want to give to me and you don't see it in here, please go ahead and message me through the comment section, and maybe we can add that to the watch list. Let's see if I can get this thing to go all the way down. It's kind of hard. I can't get it to go all the way down, but there's a few more down there. Scroll down there. So if you know of a stock that might fit the criteria, but it's not in this watch list, let me know about it. We can add it. Okay, so safe wheel, what do we do? The question is, this 25 strike put, is this something we still want to use? Well, we're trading BAC, which is trading at 32.44. So I'm going to take that number, 32.44, 32.44. I'm going to multiply it times 70%. That's $23. Okay, so we know that our strike is above 70% of the price. So therefore, we can still use this put hedge. So therefore, we're still good to go. I'm going to check and make sure that BAC, because it was going into earnings, maybe the premium was a little higher than normal. So let's take a look at the premium. If we're out of the money here on a put, so out of the money would be what, $32? Yeah, as long as we can get 1%. So, $30, $35, $34 on a $32 stock, and it's out of the money. So we can still continue to use BAC. Of course, we're in this this expiration cycle right here, the one that expires on Friday. So that's what I'm going to do. I'm going to continue to use my put hedge because it's still within 70% of my price. And I'm going to continue to use BAC because I can get 1% out of the money. So this put right here, 32, which is out of the money, I'm going to sell it. And I'm going to do one because I have around a $5,000 account. Once I get it to $10,000, I would do two of these. So I want to get as much as I can. I might try to get 36. Okay, so I might only get $35 for this. Okay. So we've got our premium on. Now we want to protect our hedge. So the way we protect our hedge is we buy like a little call here for $5 or $6. This one here, the 34.50, we'll buy just in case BAC just kind of goes up like crazy. Our hedge will lose, our put hedge will lose in value, but we cover it here by buying this. We'll try to get it for $5. All right, I'll pay $6. I won't pay $7. Okay. All right, so there we have it. We came in the near term. We sold some premium. And we have our put hedge on still, which is still protecting us because it's within 70%. All right. That should do it for the safe wheel for today. So now, again, okay, on this, if you've been following my safe wheel, you may not have seen, or I haven't traded every single scenario. So if you want to get a flow chart that would show you every single scenario, I have that available in the description. And let's do one final thing. how is this account doing? We started with $5,000, so we're up what? 1,118. 5,000. So the account's up about 22% year to date. So we're doing quite well. Back test showed about a 10% return, so we're doing better than normal with this safe wheel system. Okay, let me get into questions. Richard, when buying the put hedge and there's a choice at 160 or 190, what's better? Okay, so the general rule I use is 150 DTE or higher, but as close to 150 DTE as possible. So I would go with the 160. I'm the one who knocks. Can you compare Synthetic Dragon, Safe Wheel, and Earnings Edge? Okay, so they're all level 5 trades, which means that they're trades that are premium selling, but they're also hedged. Um, the Earnings Edge is kind of its own system. It's kind of different. We're just coming into earnings, and we are looking to capitalize on the fact that we're coming into earnings. And when you do that, you can buy certain options that most of the time are not going to lose value because in a week they're going to be having earnings. So if you buy, um, they're going to keep their value. But then you sell something against those that is going to depreciate and fall and come into basically intrinsic only value. So that's kind of a different ball game. But the Synthetic Dragon is really, it's very similar to the Premier Level 5. That one has a lot of great characteristics. It's non-directional. It's an extremely high win rate, probably over 90%, maybe 95%. Doesn't have a lot of drawdowns. It's a great system. The Safe Wheel is more of a... The Safe Wheel has more risk, than the Synthetic Dragon. And the Earnings Edge has more risk than the Safe Wheel. So the Safe Wheel is just kind of a way to trade the wheel strategy that's different than most because it's throwing a hedge in there. Because the problem with the wheel strategy is that it's a long strategy. So the market needs to go up, or your stock needs to go up typically to make money with a wheel. And if it goes down heavily, you get hurt really bad and you get stuck in a position and it doesn't work well. But if you can throw a hedge in there and use the rules that I use, it works pretty well. But it's not as nice. Like the Safe Wheel doesn't have a nice flat gamma. Direction can affect it as opposed to the Synthetic Dragon. So I hope I kind of explained that a little more. Maybe if you have a little more detailed question, I might be able to get into that. Okay, Walter. Which of the Safe Wheel candidates suggested by viewers last week did you think were good candidates? Well, I didn't really go into the details. The fact is, I didn't need to get out of BAC and look for a new one. So I didn't determine that. If I had to get out of BAC, what I would probably do first is look at the ones that are closest to $30 and just kind of work my way through there. So, this one right here, 29 bucks CSX. Okay, well, I'd check that out and see, make sure it had the liquidity and it fit all the characteristics. That's probably how I would start it. Because there's really not one better than the other as long as they fit the characteristics. I really wouldn't choose one or the other. Some of them don't have enough premium. Obviously, those don't qualify. Some of them have a lot of premium. I haven't really back tested something crazy like a meme stock or anything like that with the system. It'd probably be fine, but why not trade something kind of in that medium range like Macy's? That was a good stock. So something in that range, like BAC is a little soft on the premium. Like it doesn't have a lot of premium. It barely makes the cut. So something a little stronger with a little more premium probably would be a little better. Let's see CSX. See CSX, see how this has a little more premium out of the money? So this one right here would probably be a little better candidate, but I don't want to get I'm not sure about how crazy I would get with like AMC. That's a little much. But hey, you might trade AMC one day just to see how it works out. I haven't back tested it, like I said, that high of a premium type stock on this, but I'm sure it would work fine. All right. Audio's good. All right, let's see here. Boom. Started the safe wheel. Just copy what you did. Thank you. You're welcome. Yeah, I think that's a good idea, just copying what I'm doing. I think that'll work out. I'm not a financial advisor, though, so I can't give financial advice. So only trade with money you're willing to lose. All the disclaimers. Okay, Ben, do you ever close early if you get 80% or 90% of your premium due to the stock going up quickly? No, I'm kind of, I don't know if you want to call me lazy or systematic. Whatever I need to do, if I come in on Monday morning, that's what I do. So I just want to pay attention to this thing on Monday mornings and then at the end of the day on Friday to see if my long call is in the money. So if I wasn't doing a live stream, this would literally take me 5 to 10 minutes a week, and that's the way I like to build my systems. I want to be able to do other things rather than sitting in front of the screen all day. Hayden, would you share the Safe Wheel watch list? Sure. Well, what do you mean by share it? Like here it is here and here. So I guess that would be sharing it. I hope that's what you mean by sharing it. Iraqi trader, a P5, so the premier level 5. So far, $900 profit and almost $1,200 for your service. So it's been 3 months. So it's about $200. So it's been about $600 in cost, and we're up about $800 overall. The thing is, this is coming along about where it should be. I was thinking it would be a little bit higher than that by now, but yeah, spent $600. You're up 836, but you're learning. Also, I'm not giving away everything, but you're learning quite a bit about how to trade properly, really, instead of a lot of the stuff that's out there. Okay. Richard, when does the put hedge DTE become too low? About 100 DTEs when I start thinking about, I need to roll this thing up or start thinking about getting into a new put hedge in a new cycle. About 100 DTE. Okay, John. Is a safe way to make more profit if you use a stock with higher premiums? I believe it's all relative because like RBLX, you're going to pay a lot more for that put hedge. So that put hedge is going to depreciate, but you're also going to collect a lot more premium in the near term. But I think it all kind of cancels itself out. So I would say, would the profit increase? I would say no. I'd say it's pretty evenly distributed. Okay, Ben, I noticed the stocks you've picked up so far, that 1% premium is 1 to 3 strikes out of the money. Is that preferred? Do stocks that are more volatile, there are 5 strikes out, not work as well? Well, I haven't, like I said, I haven't back tested the higher premium stocks, but I just based on my knowledge and what I think, the way I think about it, they're pretty much going to even each other out because you're going to pay more for the put hedge, but you're also going to collect a lot more near-term premium, so they should kind of cancel each other out. But we saw with Macy's that one worked pretty well And that was what I would call a medium premium stock, where we have BAC right now, where it's kind of a low premium stock. But I might throw in a high premium stock there next time just to kind of see how it works out. And you just never know. I mean, you could run a couple cycles, and you don't make money, but that doesn't mean the stock doesn't work overall over the long term. So it's kind of hard to predict without doing the back test. Monica, thank you, providing great information. You are welcome. Walter, how do I define good liquidity? Oh, wow. This is not good right here. Look at the liquidity of the CSX. As you can see, it's 5 cent. I'm going to just take this one off the list right now. 3 cents is probably about my, yeah, 3 cents is probably about as far as I'm willing to go. If it's 4 cents, 5 cents, it's too high. Like this CVNA. I'm taking that off the list right now because looking at the bid-ask spread is too high. See, these are too high. These are 5 and 10 cents on VAL. Might as well just take it right off right now. But anyway, so yeah, 3 cents I would work with that. 4 cents, nah. There's too many of them out there to choose from that give you the liquidity that I like. Cuban 77. In what circumstances do you incorporate the second tier of BAC once you're assigned and selling a call is not giving you? Yes. So once I'm assigned and selling a call out of the money is not giving me 1%, that's when I'll implement tier number 2. That is correct. And for all the rules, for every scenario, I put together a flow chart, and that is available. And there's a link in the description. Walter, if you're trading a larger account, is it better just to scale one underlying or diversify into more than one? I would only trade one underlying. No reason to. I don't think that you're going to get any diversification by using different underlyings. You're going to get all the diversification you need with one underlying. You don't know what's going to happen with that particular cycle. But just trading one underlying is a lot more simple and the way that I would do it. I'm the one who knocks. Would you buy a put hedge that is 2 to 3 months out only? I would not, because you're getting a lot of theta decay, and that put hedge is decaying almost as fast as your near-term puts and calls that you're selling. And so you're trying to play catch up there, and that put hedge would give you a better hedge, by the way, but it would also depreciate too fast. And I think that it would depreciate so fast that you wouldn't be able to make up for that by selling your near-term premium. And the reason why it would provide a better hedge is because it's nearer term, and whenever you get closer to the money, you get more volatility, and therefore the prices are higher. And that's called, the overall concept of that is called weighted vega. Okay, Jerry, can you trade SPY? Yeah, you can, but I haven't sized out the account. I have a $5,000 account, therefore I use a $30 stock. So you would have to resize everything, and then I would have to kind of back test to verify it. So I wouldn't trade SPY with this unless I back tested it and made sure my sizing was done properly. Walter, click the like and subscribe. Thanks, Walter. I always forget to say that. Click like and subscribe to the channel, and hit the notification bell, because that's how you can see my live streams. Otherwise, I think it's difficult to find the live stream unless you're subscribed and hit that notification bell. Okay, I don't see any other questions here today. Oh wait, here it is, Jerry. Jerry, you're referring to, oh, Okay, not the safe wheel. The other strategy, the Premier Level 5, um, I would stick with ES or SPX. Um, and it has to do with the using span margin or portfolio margin. So with SPY, um, I mean, you can use portfolio margin, but it just typically your commissions just get too high. Why use that when you can use SPX? Plus SPX and ES also have tax advantages that SPY does not. So I wouldn't use SPY for the Premier Level 5. I mean, unless you're just trying to learn it and you want to keep your size super small, then maybe you can do it that way. But typically, no. And you want to make sure you have portfolio margin. Okay, I'm going to go ahead and close out the broadcast for now. Remember, if the P&L is not real, what else are they trying to conceal?